Yeah, that's good.
So, we see many issues in society today. We always want to look to provide solutions to these issues, but sometimes it's not that simple. We are not so informed in the financial aspects and how to get these projects done. So even when we see issues that can be great ideas, for example composting, and we want to provide a sustainable energy solution and be able to help a local economy among other benefits, it's important to have the right guidance to be able to implement these plans and get it through. So Mr. Arthur, as your CPAs Kunal, Ismail, and David, we're glad to be able to help you on your adventure. The goal you've asked us, or the request you've had from us, is to be able to help you with your financial statements while better helping you understand your business. The key considerations that you've given us have been to present the various types of accounting services available to you, to be able to provide the best accounting methods for you, and to be able to help you in your process with your bank loan that you're looking for. You've incorporated your business in March, earlier this year, 2019, and your financial statements end on January 31st, 2020. You have a loan pending application, and these are certainly things that we're going to be looking at. We know that you use the IFRS framework, which we'll be considering in our calculations, as well as your upcoming loan application and how to help you get that. So we're going to start off by talking a little bit about financial reporting. First off, we're going to talk about the reporting framework. You noted to us that you're not too sure how things work when you want to give your bank loan application, and that you've even chosen January 31st of the year just because it seemed like the right thing, but you didn't understand why. So it's important for us to better understand financial statements, what their purpose is. We usually have 4 official financial statements ranging from financial positions, a statement of income, statement of cash flows, and shareholders' equity. And the year ends vary on your choice. Typically, they're usually on December 31st. Now this is important because this is usually the time that you will put all these in consideration, especially in your income. You're going to measure it throughout your year. So that's going to be your first day, the day after, until that date for all your financial and economic activity to be noted in there. You've chosen to do IFRS, and we're going to explain to you maybe the difference between it a little bit. So you have IFRS and you have ASPE. IFRS specializes more for international financial reporting standards, while ASPE is for private enterprises. The purposes can vary. Usually IFRS is good when you have a public company and you're looking to attract international investors. There's common standards for this, and this is really important because we know that financial statements, people need to be able to make sure that the information they get is right, it's verifiable, and it's especially comparable. So if you're from another country, the statements that you receive will not be the same. IFRS helps solve that issue. ASPE is more common in national, like that we'd find, for example, in Canada, especially if you're private enterprises. And these both have different ways to be measured, which is very important. Some of the regulations can be more to help, they have the same purpose, but they have different regulations within this. And the relevant statements for bank loan. You asked us, you said that you're not too sure what we should give the bank, and we believe that the best indicators for you, for the bank, to provide you a loan would be a statement of financial position as well as a statement of income. Your statement of financial position will calculate your assets, you have your liabilities, your shareholders' equity, and this helps them assess if you're able to pay back the loan. Statement of income helps them look at your revenues and expenses and helps them assess, what's your business about, how's it going.
So now I'm going to talk a little bit about the revenue. So in terms of things that we saw inside the revenue, there was an issue that we found was that it's changing the price. Right now the market price is at $4.50, and what was on the orders of beforehand was $5.75. So we believe that it should be recorded under IFRS at the gross amount that will be there. So what we would do as a recommendation would be to record a sale discount account, and then we would debit the cash and the sales discount, and then we would credit the revenue for that amount. Now I'll pass it on to Ismail, who will talk about the sale of the compost waste.
As you're going to see during our presentation, you have different type of revenue, and those different type of revenue need to be recognized at different moment of the year. So one of the revenue you have is actually you sell compost raw. So you have a partnership with Pierre to sell compost raw. So there's so basically you get to keep 10% of the commission, and 90% of the sales revenue goes to Pierre. So it's paid on a quarterly basis. So in this transaction, you're going to be the agent, and Pierre is going to be the principal. So you collect the whole amount of money, but because under IFRS 15, only 10% of the revenue is actually for you. So you're only gonna recognize the part that is actually for you, and the other part will be you're gonna create a liability account. So when it's gonna be time to pay the amount to Pierre, you're gonna debit this account. Sorry. So our recommendation is really to record revenue, 10% for your shares, and to set up a liability account for the rest. So we have computed an impact based on the information provided to us. So our next accounting issues is you have a compost depot services. So not a lot of people are actually able to compost at their home. So you actually provide this service to some of your customers. So basically it's a subscription. So they pay, it's a 3-year subscription, and they pay the whole amount at the beginning, which is $400 for the service. But unfortunately, you cannot record the full revenue because you do not perform you don't perform the services during the first year. So there's actually an annual limit of 250 kilograms, and each additional kilograms going, the client is going to have to pay $1 for each additional one. So under IFRS, there's 5 steps to actually recognize revenue. There must be a contract, so there is a contract. There's a subscription that actually the client signed at the beginning. There's only one performance in this contract, which is really for the rent. And there's a transaction price. So we know the transaction price is actually for the performance actually $400 for the subscription and $1 for additional. But the service is performed over time, so over the 3 years of the contract. So really our recommendation is, oh sorry, there was actually a mistake, but our recommendation for this would be really to record the revenue for this over time. So we're gonna use a percentage of competition over the full contract method and based on time. And now I'll pass on to my colleague to talk about the building and equipment.
Thank you, Isla. So for every company, it is important to have the grounds, the building, and the land. So in this case of us, it's we acquired a building on May 1st, 2019 for a value of $250,000, and it was appraised for $150,000. So the way that we have to record this is that we're going to take it should be recognized at that amount when it's probable, and if the cost is reliably measurable. So we took the amount of the fair market value, and we looked at the amount that would be allocated with the allocation method to the land and to the building to find from the cost, to break down the joint cost into 2 accounts. And then we also looked at the depreciation expense, which was over a useful life of 15 years. And then we prorated it, which is the months from the month that we acquired the building, which was in May. So that's why we say that we should also disclose in the financial statements the breakdown of the property, plant, and equipment with each building in order to give full disclosure to the users. And as you can see, we would find a PP&E before the adjustments of $241,700 with the building and accumulation depreciation and the depreciation expense, which would impact the income statement and the retained earnings. Then there is some additional costs that came into play with the building. So there is $30,000 of materials that was needed to be to run the operation. So this amount would be capitalized. But then there was also the type of shingle roofs that were placed, and that, since it was not mandated by the municipal, it is going to be expensed. And there was also the windows, which were not necessary to the operations, which will be expensed too. The garage door and the entrance, because it was used for the delivery and for the operations, they will be capitalized. So we will find a capitalizing of a building of $50,000 of increase and an expense of $65,000 as maintenance expense that will be incurred, which will also affect the depreciation expense of $2,375. So as you can see, the different impacts on the financial statements that they will have. Now I'm going to talk to you guys about the equipment and the tools and the materials that we use in order to provide our operations and our services. So it's a related party transaction for the first time for the SAW. So that's why we received some shares and contribution surplus in exchange of the first time SAW. That should be recorded at the fair market value at the date of the beginning of the corporation. So they say to disclose the nature of the related party and disclose the share-based transaction that had happened. So as we can look, there was also they should expense the new blades that were in place, and they should, and because the blades are not, they're recurring costs and operating costs, so these should be expensed. And you can see the journal entry and how it would affect our books too for the equipment and the common shares. And now I'm going to talk to you guys about the salaries. So there was currently 4 employees working with us throughout the year. The expense should be recorded as incurred of these employees. So we had paid in total $72,452 in the last fiscal year end, but as we know, it is paid 1 week after the end of the period. So on January 27, 2020, it was the end of the period. So then there would be an account for salaries payable and salaries expense. So the salaries expense would be of $78,808, and then there would be the cash amount that was paid and the salaries payable that is recurring for those 2 weeks that will be paid in the new fiscal year end. Now I'll talk to you guys a bit about the loan and how we're trying to achieve financing. So there's $350,000 that we're receiving from the bank. This is a 15-year loan, and we're paying an interest with an annual rate of 2.25. So as we see, the present value of the loan needs to be recorded in our balance sheet as a loan, and we have to look at our interest expense that we have incurred. To calculate the PMT of 180 months, we had found an interest expense of $2,293 that was in place. That will be paid for the year that have passed. And also, there were other issues that we had found, such as for the inventory and intangible assets with the website that we had. Also with the recyclable portion of the intangible assets, which with the extent of the timing for this meeting, unfortunately, but we would be happy to sit down and talk more about it with you guys later on if needed. So for the inventory, we have to look at the amount that was in the cost of goods sold. That would be allocated to that and how it would do our income statement and affect it. We would also have to look at the ending balances and have them on our balance sheets reflected. The amount that's recyclable is about 1% of all of the scrap allocated to the scrap wood of the normal wood, so that amount would also be brought back and removed from the cost of goods sold and added back to our recycling amount. And there was also the impact on the website. So the website is an intangible asset, which should be recognized for the amount that it was valued at for the services, because although it was a related transaction and should be disclosed, the services were incurred, and that they should be recorded because the guy has been doing this as a business and knows the value of that. So we'll record that amount of $2,000 for the development, and the rest of the amount of the maintenance, the difference of $975 for the 6 months will be done ×2 for the yearly amount, and prorated to the amount of months that were actually from the development to the end of the year as a recurring expense of website maintenance expense. So now in conclusion, and I will take over.
Thank you, David. So we're going to conclude a little bit about our meeting here today. You've asked us to help you prepare financial statements while helping you better understand your business. We hope that you've gained a lot of insight on this, with many considerations as you do your business, such as your renovations, knowing that these things affect your financial statements and will impact your loans and other finances that you will have. We also hope that you consider the various types of accounting services, that knowing that even as you're doing your composting project, if from a tax perspective, you could receive some green incentives as well. And the best accounting methods depend also a lot on what you do for your goals. So if you're applying for a bank loan, maybe you should hang down on expenses and probably invest more, do more to spend more to get more money as opposed to just spending, because that is a way of doing business, and it depends on the methods as well. And yeah, so we thank you and open the ground for questions.
I have a little question for you.
Yeah.
Right now I don't have a salary.
Right.
should I take a salary or take dividends, and what are the pros and cons for each situation?
Well, you could give your salary if that's something you'd like. It would be kind of like the salaries you give to your employee. So the pros of that is it's very predictor. You can predict it very easily because you will give yourself fixed hours and fixed salaries. But of course, you'll be limited to what you give yourself, and that's also something that's important to consider in your business because sometimes, as you are starting out recently, money it can be an issue. But if you'd like to go at it more the way that you have as being as a shareholder of your own company, you are the majority shareholder, dividends could give you your money depending on your profits at the end. And that depends on you if you're comfortable and if you have other money aside for your living expenses and your personal situation for if dividends are suffice for you. So it depends on whether you'd rather have to give yourself a fixed salary or dividends depending on what your goals are in the long term to help finance your company.
Est-ce que je peux poser ma question en
Ah
français?
oui.
Parfait, oui. Au début de la présentation, vous avez dit que les statements, les relevant statements pour que la banque vous accorde un prêt, c'était évidemment les résultats puis les bilans.
Ouais.
Pourquoi, mettons, vous n'avez pas intégré l'état de trésorerie là-dedans?
État de trésorier, c'est shareholders equity, ça?
En fait, c'est cash flow.
Cash flow. Would you like to answer?
Yeah, I do. It's because, especially when you do the financial statements and all, what we're focusing on is on an accrual basis and not on cash basis. Maybe later, if we would work on the taxation, then we would look more at the cash basis and can prepare for the fiscal year and the cash flow statement in accordance to that.
Yeah, I have a question more about the sale because as you maybe see when you read the case, I have a lot of problems in issue to the right accountant treatment to my sale. We spoke a lot about the compost warrants and also maintenance and stuff like that, but I didn't hear you about the compost back. You know, when the client pay 50% at the beginning, and after that it depends of the step to the project. What you can say about that?
Okay, so are you talking about like, there was something about like the different contract?
Yes.
Okay, so basically we know you have completed 122 projects, so you can totally record revenue for those projects because you're done. For the other projects, you cannot record the full revenue from each of step because the contracts are split into different steps. Some steps are actually you have to record, such as construction. It's you will have to use the percentage of completion. But some steps, because the first one was actually free. So it's depends on which step, but I would say, because we do have a percentage for the time for each one, but I would say it would be more relevant to record the revenue on the percentage of completion, but based on cost incurred instead of time. Because actually some steps can incur more cost than others for the different step of the contract. But you cannot record the full revenue when you receive money.
Thank you.
Vous avez passé à la dépense de Windows, okay. I was wondering why you didn't capitalize them. What was the reason?
So the windows were placed in order to bring isolation inside the building, but they're not really fundamental to the operations of the building, and they don't have future economic benefits that will be bringing to it. So that's why we expensed it, because we believe that we can still operate and make our products and without the windows.
Okay.
And at the end, you spoke a little bit about the inventories
Yeah.
issue. I didn't sure I understand what's your answer about the stock of wood. You know about the price. It value a lot during a year. There is something I have to do, you know, in my final statement about that, or?
Well, the thing with fluctuating values of the wood, we have to record inventory at the lowest cost of cost and net realizable value, which would be selling price minus the cost of us. So we would see it depending on which one it is and try to make an average maybe during the year of the value from beginning and the year end to see the value, that fluctuations. So we can use different inventory methods, kind of like FIFO or weighted average method.
Okay, thanks. My question?
No.
Thank you.
Thank you.